In this video, we're going to talk about the Roth IRA income limits for 2021, and if you earn too much money, how else can you get money into the Roth IRA? But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So up on the board behind me, I have the income limits for the Roth IRA for 2021. But before we get into that, let's talk about the contribution limits. For 2021, you can put up to $6,000 in your Roth IRA. And if you're 50 or older, you can do an additional $1,000, which is called a catch-up contribution. That means if you're 50 or older, you can do a total amount of up to $7,000. Now, the Roth IRA is a special type of retirement plan where it goes in after tax, it grows tax deferred, and if you pull it out in retirement or for a qualifying expense like a first home purchase, you can pull it out tax-free. Now, for the Roth IRA income limits for 2021, it matters based on your filing status. So if you're filing as single or head of household, there's what we call a range or a phase out, and it goes from $125,000 up to $140,000, which begins to phase out. So if your modified adjusted gross income is over $140,000, then you need to find another way to contribute to a Roth IRA. If you're married filing jointly, that range is from $198,000 all the way up to $208,000. And if you're filing it separately, they really discourage you from filing separately by doing things like this, but it goes from $0 to $10,000. So it's very low. And once you get past that $10,000 as filing separately, you're no longer eligible to contribute directly to a Roth IRA. Now let's talk about these income ranges and the phase outs, how that works. So let's use an example. If you're filing as single, it goes from $125,000 up to $140,000. So let's say that you're earning $130,000. That is $5,000 over the minimum amount, which is $125,000 for the phase outs. That is right there for $5,000. The range from $125,000 to $140,000 is $15,000, which is if you divide 5,000 by 15,000 gives you 0.33. If we take 0.33 and multiply it by the total amount that you could possibly contribute, and in this case, we'll use $6,000, that means that we would reduce it by $2,000. So therefore, we take our $6,000 minus $2,000, gives us a maximum contribution for 2021 if we earned $130,000 as single or head of household. That means we can put in $4,000. So the math is going to work identically if you're married filing jointly. The only difference is going to be the range. The range here from $198,000 to $208,000 is only $10,000, whereas single and head of household, it was $15,000. So you're only going to change this number from 15 to 10 if you're trying to figure out that math for married filing jointly, but the number above would stay the same. You would just subtract it from 198,000 or subtract 198,000 from the income that's over that amount. That's how you figure out how much you can contribute, which is a reduced amount if your income falls within these ranges. Now, if you're over these ranges, there's still other ways that you can contribute to the Roth IRA. It's just a backdoor to do it, which is the Backdoor Roth IRA. That means you're making a non-deductible contribution to your traditional IRA. So a non-deductible contribution is like a Roth contribution where it's after tax, and then you can roll that over to the Roth IRA. Now, it gets a little bit more complicated than that, but that is how it works. And I have done other videos if you wanted to learn more about the Backdoor Roth IRA and if your income is over these thresholds. Now, it does not aggregate. The Roth IRA does not include contributions to your other workplace retirement plans. So if you have a 401k, 403b, 457, those contributions won't affect the amount that you can put into the Roth IRA. But if you're making contributions and you're close to any of these thresholds and you're making contributions pre-tax, like let's say into your 401k, a pre-tax 401k contribution, that reduces your adjusted gross income, and that might qualify you then to contribute to the Roth IRA. So that's something to consider when you're looking at the Roth IRA income limits. If you have any questions on the Roth IRA, let me know in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.